Welcome to this demonstration of the Taxpert Tax Calculator app 2023. And this is the latest version, incorporating, of course, all the recent changes to tax and national insurance rates, and also coordinating with the latest HMRC calculator. Now, before I look at some of the figure work with you, let me just draw your attention to the tabs at the bottom of this page. You can see there are 7 in total. The overview, the personal tax 2023, which is the main input screen that we're looking at, a tab for property income, another tab that gives a personal tax client report, and then 2 sets of workings, one for the year just ended and one for the current tax year, 23-4, and finally a list of rates. And I'll just quickly have a look at 1 or 2 of those with you before getting into what the program actually does. First, with the rates, you can see that we've got details of the rates and allowances for 22-3 and also 23-4, and in fact for earlier years going back to 15-16 for the legacy years. And you can also see that we've got the different rates for Scottish resident taxpayers and rest of the UK. And one particular point to note is that the Scottish rates have changed quite significantly between last tax year and this. And in particular, if you look at the higher rate band, it has shrunk quite dramatically for Scottish rate taxpayers, which of course increases their tax liability by comparison with the rest of the UK. If we look at the workings sheets, then these are really only needed if you want to drill down into how the calculations stack up. So they show the allocation of allowances and other reliefs, the savings rate band, the personal savings allowance, and then the allocation to the different rate bands. Again, if it's Scottish, you've got starter rate, basic rate band, intermediate rate, etc. And it ends up with the tax calculation and some more complicated stuff over here. One of those for 23-4, different one for 22-3. The personal tax client report are quite useful for looking at tax cash flows. And we can see at the bottom here that we've got the final payment due on 31st of Jan 24, with the first payment on account for the 23-4 tax year, etc. And as is common throughout my apps, the orange boxes represent the data that I work out HMRC will come up with, so that you can straight away see any differences between what I think is the correct answer and what the HMRC calculator, which they admit gets some examples wrong, what that calculator will show. The yellow boxes allow us to input data such as PAYE tax deducted at source and payments already made. These other boxes at the top will pick up from the main personal tax spreadsheet or page, and also the property income page, which enables us to put in net rental before finance costs. In a way, now that we're beyond the transitional period for finance costs, I could simplify this page, but for ease I haven't. But it is important that we have the right relievable amounts, and that's all programmed into that page. But it's very easy to put the figures in and then see what the results are. The overview, the first tab, simply gives a bit of chat. Note this text in red. The personal tax 23 tab includes the tax figure calculated by the HMRC calculator and identifies cases where the HMRC calculation is wrong. There are two main purposes to this. When we put in the data, we can see for the year just ended and for the current tax year what the tax and the NI should be. And that is the main use, so that we can advise clients on what their potential liabilities and payments are going to be. But it also, in this red box, picks up the HMRC, not red, it's orange, picks up the HMRC figure. And if there's a difference, that will come out. Now, a couple of other things before I put some figures in and play around with it. We've got here a state pension age box, and we can toggle that between yes and no. And you can see top right says RUK, that's non-Scottish, pensioner, that just flipped as I toggled state pension age from yes to no. Of course, that has an implication for national insurance, both class 1 primary and also class 2 and class 4 for the self-employed. But we also have the toggle for Scottish taxpayers, if you are Scottish, and then that up there changes to Scottish, and no, some think it should be nay if you're not Scottish, and that will make a difference in some, but not all cases, to the overall tax. Child benefit is accommodated, so you put in the child benefit claimed and it'll automatically work out if there is a high income child benefit charge. Now, let's put in some figures. Let's start with employment income of, let's say, 85,000. As soon as you put it in, you can see the tax calculation, and I'm happy to say that the revenue would agree with that, so they should in a simple case. And you can also see the NI, which in that case, of course, will be the primary national insurance payable by the taxpayer. If I was already, as I indeed am, of state pension age, toggle that to yes, and the NI disappears. If I'm Scottish, will it make any difference? Well, let's look at the tax figure at the moment, 21,432. My guess is that it will make a difference because that's the range within which Scottish taxpayers will be more heavily taxed. And indeed, when I click on I for Scottish, I will see the 21,432 tax charge go up to 23,325. So you can see the cost of being a Scottish resident there. But let's go back to non-Scottish, so the rest of the UK, and let's put in some more income. Let's suppose we've got interest of £34,000. Now, I know that's an awful lot. It could be a chargeable event gain of some sort. But again, the tax figures agree. I agree with HMRC or vice versa. Oh, and then we can input losses, 2 categories. Courtesy of George Osborne, there are losses that could be subject to restriction to the greater of 25% of adjusted income or £50,000. But there could be losses or reliefs not subject to that restriction. And down in the notes, I remind myself and others that, I can't say it's not down in the notes, it's just up here. If we're looking at overlap relief being used up in 22.3, or indeed the 23.4 transitional year, which is a different story altogether, or if we're looking at share losses on enterprise investment scheme, then they're not subject to restriction. And let's imagine that we do in fact have a loss of £120,000 on an investment in an enterprise investment scheme company that has gone bad. So we get loss relief on that of 120,000. Now, I haven't clicked return yet, but this is going to be interesting to me, if not to anybody else, because when I take account of that loss relief, the tax will go down significantly, but you'll notice that I've forgotten to put in, and I'm not going to re-record this, some dividends. So let me, in fact, get rid of that loss and put in some dividends of 96,000. And then it'll do what I was hoping it would do. You can see now the tax with dividends, 75,425, both I and the revenue agree. Now let's put in that loss of 120,000. When I click return on that, look what happens. The correct tax is 17,738. Your software will calculate, unless your software supplier has actually done what I've done here, 18,799. That's what the revenue software comes up with. Why? Because the revenue misallocate the relief to the different elements of income. And it's the same old problem that we had going back to George Osborne's complications in 2016. And here we are all these years further on, and HMRC, I can understand why, HMRC have still got errors in their spreadsheet that calculates this tax liability. And it's their spreadsheet that feeds into almost all proprietary tax return software. So the chances are your software, put it in, see what your software comes up with. It'll come up with 18,799, and that is over £1,000 more than it should be. So there's an example of this calculator showing how the revenue is going to get it wrong. Now, admittedly, these are unusual figures, but unfortunately, it means that we can't have 100% confidence that the revenue calculator gets it right. Well, that's almost enough on that point. Let me just put some figures in on the property income. Let's suppose that we've got net rental of, I don't know, 18,000 a year and finance costs of, let's say, 12,000 a year, none of which is deductible as an expense, but it all goes down now into the tax reducer calculation. And that'll show me how much of a tax reduction I can get. On this basis, interestingly, you don't get the full 20% of the 12,000. You're only going to get 2,186. And that's because I'll just zero the 23, 24. It automatically replicated, and that's just going to distract us. So let's get rid of it. This demonstrates that in some scenarios, the calculation of the tax reduction is not going to be what you thought it would be. And that's because we take 20% of the lowest of three figures, the 12,000 finance cost, the adjusted property profits of 18,000, or the adjusted total income. And it's that figure that, because of the losses that I got here, the adjusted total income figure, which, by the way, we'll see in the workings over here, the ATI for property finance restriction is 10,930. And that's going to be the 233,000 of total income, less the 126, I think. Or maybe it's less that apart from the PA, I forget. But anyway, that is the calculation, which will further restrict the tax reducer. And if I look at the personal tax client report, then I can see that the property interest tax reduction is 2,186 rather than 2,400. And that will then give me the total deduction. This, by the way, has already input 17,000 as the PAYE deducted at source on the income. That looks like a standard 20%, but you can change that figure, and that will then give us the right payments on account, etc. But what has happened here is quite interesting, because the personal tax computation now shows a difference of £1,100 now that I put the property income figures in, and that feeds through into that personal tax report. So it's all still ridiculously complicated, but we can follow all that through in the workings. A couple of further points. If you want simply to see what the same income, etc., would do in 23/4, the current tax year, click that button, replicate, and all the same figures come in, and we can see what the tax and NI would be. Oh, look, the NI has gone down a lot. That's because of the mucking about with national insurance rates that we had last autumn. So NI has gone down, but the tax figures, oh, they've gone down a bit as well. And I haven't the energy to work out why or where. It'll be to do with the allocation of allowances and so on this basis. But overall, my net income is going to go down by 3,474 on that analysis. If I then want to get the same net income as I did in 22/23, there's a clever little button here, equalize. And if I press that, it'll whir for a bit while a background macro called solver comes into play. But once we've completed with that, you can see that the difference there is now 0. And what that has done is tell me that I would need dividends of 102,464 in order to get the same net income as this year. And I think that's probably enough of what you want to see on this demonstration of the Tax Calculator app. But the more you play around with it, the more you'll see the advantage and the use and the reports that you can produce for clients with it.